Just in general, I think what we have to look at is coming into the year, the rally was pretty healthy and it was broad-based. And now we're seeing a little more narrow leadership. We're seeing the NASDAQ really outperform. You're seeing discretionary outperform staples. You're getting a lot of pro-cyclical signals. So something like healthcare, utilities, and some more of those defensives are going to see selling pressure during that time.
Are financials a cyclical or a value play?
Seeing financials report healthy earnings, I think, is a pro-cyclical move. And you also sometimes can look at the banks versus gold, and banks are now outperforming gold. They're doing well versus gold, and that's more of a pro-cyclical signal as well.
Banks versus gold is not a classic comparison, but gold sort of suffering against other metals is again a cyclical.
Copper in particular, right. Yeah, so and copper's been doing well and gold suffering against copper. So when you compare things that usually are pretty clear signals of a healthy economy, they usually are also pretty clear signals that we're going to continue in sort of an upward momentum, but we don't expect the upward momentum to continue at the same pace that it has so far this year.
Meantime, China released a slew of data overnight indicating that its economy might be stronger than previously expected. The Chinese economy expanded by 6.4% year over year. It was expected it would be 6.3%. The industrial production data was good. The fixed asset investment and retail sales data were decent, but not huge wins. Mike, we were discussing this with Secretary Liu. The key point, whether it's sustainable for a decade or not, is that for 2019, it looks like things have stabilized and picked up again.
For sure. And to me, what's really salient about it is the market kind of shrugged. In other words, overnight, we got the numbers. It seemed like you were going to get a stronger open, kind of reinforce that idea that the global growth trade is not really vulnerable. So that just suggests to me that it's kind of consensus right now that China has put in a bottom in growth. Wouldn't make too much of the reaction, except to say the market didn't use it as an opportunity to rally very hard.
Well, you know what else they didn't use as an opportunity to rally very hard is word that we would get a Chinese trade deal between the U.S. and China in May. I mean, there was a time where the market was so sensitive to every single headline, and a deal coming next month would have been more exciting, Liz. What does that tell you?
I think it tells us that what's happened so far this year is that we've already priced in a deal happening. And every time we got some of that positive news, the market would react. And now less of a reaction, I think they're expecting it to come about. The fact that we got better GDP data out of China, I think, is an indication that the stimulus is finally working. And April really marks the beginning, hopefully, of a trend of that irrefutable positive catalyst.